Hi traders, welcome to another episode on the trades we missed last week. So this is the first trade for Monday, and you can see that price is coming from this fair value gap here. This is the first fair value gap that was cited. So as price tapped into this first fair value gap, then it's created a break of market structure here. After this break of market structure was cited, there is now a fair value gap here for our entry. So this is our entry. This is how the first entry for Monday would have been like at 130, 140. So this is it for our long position. We'll put our entry here. For a higher risk reward ratio, we're going to use the end of this fair value gap. The end of this fair value gap would be our risk, and our take profit can either be this previous high here, this one here, for a 1:2 risk reward ratio, or this high here. Using this high here would have given us a risk reward of 1:3. This is 3.31 risk to reward ratio for our first trade last Monday. The next trade is a sell. So this is it. You see that price coming from this demand now meets a fair value gap. This is a bearish fair value gap. Now this fair value gap was cited and price reached this spot here. So after price reaching this spot and respected this fair value gap, we would wait for a break of market structure and a fair value gap. So now we can cite a fair value gap here. So this fair value gap now is being cited for our entry and our break of market structure here. This is a break of market structure here. So this would be our entry. Our short position would be like this, using this fair value gap. So as price fills this fair value gap and uses this high as our stop loss, we can cite a previous low for our take profit. So you can either use this as our take profit or use this low right here for our take profits. Let's use this. Using this low right here for our take profits, you can see how you would have taken profit here. So giving you a risk reward of 3.76. Now before price comes to that area, there is our third trade. That is our trade number 3 right here. Price giving you a fair value gap here and also creating that entry point right here. You can see price coming from this fair value gap. This is a fair value gap here. Price respected this fair value gap by going up and bouncing down, and this is a break of market structure here. So after price breaks this structure, you wait for a fair value gap, or before price breaks this previous low, you have to search for a fair value gap. So is there a fair value gap here? Yes, there is a fair value gap, and this would have been our entry here. This whole fair value gap would have been our entry. So as price comes to tap this fair value gap, you would sell. So this is a sell position, and your stop loss would be above this previous high, and your take profit would be a previous low. Now this is a previous low here, the same low that was used. So the same low that was used for our previous trade would be the low that will be used for our next trade here, giving you a risk reward of 4.93. Now the next trade is our trade number 4. Now trade number 4 has cited a fair value gap here. You can see fair value gap. And bear in mind, we're on our 5 minute time frame. So as price respected this fair value gap here, price creates for us a break of market structure here. Let's use this. This can be our break of market structure. But looking at this, for a higher risk reward ratio, you can see that price breaks this previous low here, and coming back to this order block, price respected it. And as price taps this order block here, you can see how you would have sold here for a higher risk reward ratio. So this is our stop loss right here, right above this high that created this fair value gap. And our take profit would have been this previous low, this one here, giving you a risk reward of 3.4. So that would have been our number 4 trade. So the next trade is our trade number 5. And for you to cite any trade, you'd first figure out if you have found a fair value gap. So this is a fair value gap here. So, and I can highlight this fair value gap here and wait for market to tap into this fair value gap. So as market taps into this fair value gap, the next thing to look for is a break of structure. So this is a high that was broken by the market. So as you see that market breaks this previous high here and comes down, tap into this fair value gap here. So the whole fair value gap is what would highlight here, this whole fair value gap here. So this would have been our entry. So looking at things, would go for a long position, and as price taps this order block here, you see this fair value gap and order block would be our entry for a bullish position. So this would have been our stop loss here. The low that created that fair value gap would have been our stop loss, and our take profits can be this previous high here. So this would have been our take profit here, giving you a risk reward of 3.42. So the next trade is our trade number 6. As price comes to your TP, your take profit, so there is a trade number 6 here. You can see this fair value gap here. You highlight this fair value gap, and as price taps this fair value gap, you see price goes up to break this previous high. As price breaks this previous high, comes down back to fill this fair value gap and rally to the upside. So this would have been a bullish trade. Our long position would be like this. Our stop loss is right below this low that created this fair value gap. Our entry point there, and our take profits would either be this previous high, and it would have given you a risk reward of 1.94, or this high right here. You can see this high right here, giving you a risk reward of this high right here, giving you a risk reward of 9.71. So our trade number 7 is just right around the corner, and here it is. So we have our trade number 7 respecting a fair value gap here. You see how the market respected this fair value gap here. Let me put this to the side. Let me expand it a bit. So we have our fair value gap here. Price taps this fair value gap, rally to the upside to break this previous high. Then we have a newly formed fair value gap, and this fair value gap, you can as well use this order block as your entry for a higher risk to reward ratio. So we have a fair value gap here, and we have a long position using this order block as our entry. Our stop loss would be at the low that created that fair value gap. Our take profit can either be this previous high here. So using this order block here, you can get to 3.12 risk to reward ratio for this previous high. The next one is our trade number 8. So our trade number 8 respected this fair value gap here. You can see this whole fair value gap here. So as our trade number 8 respected this fair value gap, while in that fair value gap, there is a break of market structure here. Can you see the break of market structure? This previous high was broken, and as price comes down to fill in this fair value gap, it rallied to the upside. So this is our long position here using this fair value gap here, starting from this fair value gap, and our stop loss is right below this low that created that fair value gap. Our take profit can either be this high, and this would have been a risk reward ratio of 2.89, or you can use this previous high here. So this would have given you a risk to reward of 6.14. So the next one we have is our trade number 9, and you can cite that markets respected a fair value gap right here. This is a demand area. So market respected this fair value gap here and tried to rally to the upside. So market respected this fair value gap and also created a fair value gap here. Prior to that, you can see how market was about going bullish. Market respected this fair value gap here, broke this structure and tapped for our entry. So this would have been our entry for a long position. And our take profit would have been this here. So this would have been a risk reward of 3.36, and you can see there is a re-entry around here. This is a fair value gap, so this would have been our re-entry for a bullish position. So we would have entered this position here using this order block right there, and our stop loss right below this low that created that next fair value gap. Our TP is right the same with the previous trade, giving you a risk reward of 5.93. So that was our number 9 trade, and our trade number 10 respected a long time fair value gap. You can see this fair value gap here. This is the supply zone. So as market taps into that fair value gap, we would wait for a break of market structure and seek for a fair value gap. Now we have a break of market structure right here. The next thing in line is to respect this fair value gap here, and you can see how price breaks this previous low and now comes back to tap and respect this fair value gap here using this previous high that created this fair value gap. That would be our stop loss. So using this fair value gap as our entry and our high here, as our stop loss, then would use a previous low for our tick profits. This will give us a risk reward ratio of 3.25 for our number 10 trade. Now for our next trade for the new week, you can cite a fair value gap here that market is respecting. So using this fair value gap, would expect market to rally to the upside because it has created a fair value gap here but has not broken market structure. So once it breaks this previous high, would expect market to come down to tap into this fair value gap that was created. This might change according to how market opens due to any manipulation before the market or any news that will be taken before the market. But if market were to respect a normal flow of trend, it would give us a bullish trade from this setup. So let's meet on our next episode on the trade we missed. Peace.